London AIM and Australian ASX listed Atlantic Lithium is, as the name suggests, in the business of lithium. It's a lithium focused project that it has in West Africa, in both the Ghana and the Ivory Coast. It's pushing ahead with the flagship Iwoya project in Ghana to production. Neil Herbert is the executive chairman of the company. He joins us now on the line. Neil, it's good to be able to catch up with you. I want to begin, first of all, at the very start of this sort of interview, because I think it's best to ask you the question, why West Africa and why lithium in particular?
Okay, so lithium, it's a very good question. Lithium at the moment, obviously, is a mineral that's experienced a considerable boom. So if you look at the backdrop to the industry today, you're seeing a massive expansion in electric vehicles. As that happens, you see a need for a lot more lithium mines. And just to try and put that in context here, if you look at the estimates out there for new lithium mines that are required, Benchmark Minerals, which is one of the leading commodity analysts, is estimating you need another 59 new lithium mines in the next 10 years. And indeed, as some of the viewers here may have actually read a book called Vault Rush by Henry Sanderson. I met Henry a couple of weeks ago. His estimate, you need 72 mines in the next 10 years. So these are considerable estimates. Anybody who understands the mining industry will understand it takes a very long time to bring new mines forward. So any new mines are particularly welcome. The incentive price for us to bring mines on is very attractive. In fact, eye-watering at the moment. If you look at the price today, it's $7,500 a ton. Our operating costs at Iwoya are estimated to be sub $300. So you can see the sort of returns that are out there for new mines that could be brought forward in the next few years. So that's a fantastic opportunity. In terms of West Africa, well, obviously we have the right geology for lithium projects. So if you look higher up in the same system, so basically the same greenstone belt that flows through from Ghana on the coast where we are, runs through Ivory Coast and up into Mali. There's another project up in Mali that's coming to production now, which is called Lithium, which is listed on the ASX. A slightly different style of mineralization than we have. We have a particularly attractive mineralization. It's called spodumene, which is sort of the holy grail, what you'd really want if you could possibly have that in a project. So very attractive for that. In terms of our situation in Ghana, so Ghana is one of the best established mining jurisdictions in Africa. That has a long history in gold mining, and we benefit from that in terms of infrastructure. So in terms of roads, power, but also in terms of our personnel. So we're overwhelmingly a Ghanaian company. We have a lot of highly qualified and experienced staff, and we'll be bringing on a lot more now because we're now at a key stage for the project, taking it to production in the relatively near future.
Yes, an interesting point, actually, this idea about when you're coming online. As you said, the world needs far more lithium mines, and the sooner the better. My understanding is that you've got your eye on the third quarter of 2024. Before we get into more details about the point between where we are and production, I want to take a little bit of a look at funding and what the situation is, because my understanding is that you do have a funding agreement in place. So that takes you through to what?
That's correct. So we actually entered into an agreement with Piedmont Lithium. So Piedmont Lithium is building 2 hydroxide plants in the United States. And their plan is to bring those to production, and they need feedstock for that. So they invested in us about 2 years ago now. They are providing over 100 million in financing in total. In addition to any overruns and cost above that, they'll pay 50%. So what effectively they're doing is earning into 50% of our project. And by doing so, obviously, it funds a great deal of the capex costs that we face, as well as indeed the exploration and the development costs that we're currently experiencing. So with that deal, we are largely financed through to production. We don't expect to have any significant new fundraising. What we would hope to do is have one new investor, which would be a local Ghanaian investor, because we'd like to have them on board. So we've been talking to the Sovereign Wealth Fund of Ghana for some time, as was mentioned earlier in the year. And we hope that they'll come in as an investor, but we don't need any more funding beyond that. So don't expect to see us doing any more equity raises between here and taking the project to production.
Well, that is clearly good news. My understanding as well, you've got the mining license in place as well, which is another tick box. And then you're looking to get a mineral resource estimate as well sorted out. What's the time period for that?
Yes, actually, on the license, we've made the application. So this is obviously a key stage for us. So in terms of our recent news flow, you'll have seen that we put in our mining license application. It should take about a year to come to fruition, which will allow us to break ground on the project by the end of next year. You're absolutely right. We already have a mineral resource of over 30 million tons, which is obviously a very good resource. We believe the exploration target on that is probably double or more in terms of what potential bigger size of the project could be. But I think very key for investors at this stage is we're no longer an exploration company, we're actually a development stage company, so things are changing. Our next update in resource will be, I hope by the end of the year. So you see an uplift for a company about 30 million tons, you'll see another uplift in terms of the size of that, 35 million tons, I wouldn't like to say today, but it's something of that order. And we've done a considerable amount of drilling recently. So we did 47,000 meters of drilling. We're getting the results back in batches. The first batch of results came out on Friday. And what you can see in those results is, I'm very fortunate to say, is more of the same. So on one side, we're actually increasing the certainty around the area we've already worked, which allows us to do the mine plan and indeed continue exploration drilling. So you'll see some fantastic intersects in there. With the project, what the really nice thing about Awoya is it's very consistent in terms of its grade and indeed in terms of the width that we're experiencing in terms of the pegmatites that we have. It's a very attractive project against its peers. If you look at other African projects, there are a number out there. They tend to be more of a mixed mineralogy compared to what we have. So we have spodumene. So this is the most attractive hard rock mineral that you can have, which feeds through into what your processing options are, which are better in the scenario with just spodumene.
So pre-fees all done, I understand. So you've got the definitive feasibility study still to come. What's the timetable for that?
Actually, the way it will probably work now is we've done this feasibility study. We don't actually need to do a definitive feasibility study because normally you do that for funding. We will, however, be optimizing the project. So as you go forward over the next 9 months, you'll see us put out news flow as we work through those scenarios. The pre-feasibility study that we've done is very good. But what we would like to look to do is to see if we could look at higher production scenarios. And so obviously as the resource is growing, the potential to run that mine at a faster rate and produce more lithium more quickly with these attractive lithium prices, I think that's very good indeed.
The speed with which you're running this now with a view to Q3 2024, you must already now be beginning to think about offtake agreements, or rather who you're going to be targeting. What is this sort of lithium used for? What will be your direct customer base?
So ultimately, all of this lithium, I'm sure, will end up in electric vehicles. So as it stands today, the conversion plants for this to create hydroxide are all in China. However, the West is increasingly building them. And as I said, half of the product is going to Piedmont, which you will have seen signed up a deal with Tesla previously. So we can see where that mineral is going. For the remaining 50% offtake, we have a lot of suitors because there is so much demand for lithium at the moment. Frankly, there are so many people interested in taking that lithium, and particularly as it's a particularly good specification of products. We have very low impurities. It's a very nice product just because of the nature of the deposit that we have. So you should see over the next 9 months again who we decide to give that product to. And obviously some very favorable terms because it's so hard to get hold of lithium at the moment that all the converters are desperate, frankly, to get hold of more.
Is there a point, do you think, along the road to production you end up having to consider a bid for the business? You mentioned China. China is in the business of buying up a lot of battery metals, high-tech metals, such as this project is beginning to show its worth. Do you see that as possibly an option, or would you like to go through to full production? Do you see that as your target, or would you be quite happy to see it swallowed up by a larger organization?
So what I would say today is very much our plan is to take the project to production and to give investors an idea of the sort of value uplift you can expect. There's a very similar project in terms of its characteristics in Australia, which is listed on the ASX. Exactly the same sort of mineralogy, its distance to port, etc. nearer to production than we are. So where we would hope to be in, say, 18 months time from now. And their valuation runs at sort of 5-6 times our current price. Selling the company remains an option. We have some very big shareholders who are very committed to us going to production, not least Assor, which has a 23% stake, which is a mining house in South Africa, and indeed Piedmont itself, which has around 9% of the company today. So they're very keen to see it taken to production. And I do believe that there is a great more value that could be got out of the project taking it to production. However, should there be, how can I say, a knockout offer there that came forward, we would obviously consider it as a board, but very much our intention is to take the project through to production. So one of the things you'll be seeing as we go through the next few months is that we'll be expanding our team. We've had a great exploration team who made the discovery, led by our CEO, Len Koch, but obviously we now need to bring people in to develop the project and indeed take it to mining. So you'll see the filling out of our team over the next few months as we bring on new people. But very much our intention here is to get it to production and get it to production on a good timeline. So as I say, 2024 is only the year after next, not a long time for a mining project. Fortunately, it's a very simple project to take to production because of the nature of the geology that we've discussed previously. It's a very easy mining scenario. The processing options are very simple. Effectively, we just do a gravity circuit, which is not a terribly complex thing to put together. We already have some excellent staff involved, but we need to fill out that team, and you'll see that as we go over the next few months.
And the infrastructure in place to end up delivering it when you do finally produce product?
So as you asked in your first question, Ghana is a great mining country. It really is. Has a long history of mining. One of the most prosperous West African countries and one of the most stable. So it has good infrastructure in terms of roads, has a fantastic port facility, and we have power on call from hydro power plant in country. So it's also extremely well situated. One of the nice things about this project is we're only 110 kilometers from port. So if you look at all of our peers in Africa who have projects, most of them have considerably more distance to carry their product on, which is obviously very expensive and can be difficult. But infrastructure within Ghana is truly excellent. It's about the best as you could hope for.
Let's look at all you said in the context of what you just referenced, that project in Australia, which is further ahead than yours, and it's worth what you said 5 times the current value of Atlantic Lithium. Let's take a look at the share price, because this is the London listed share price, currently trading at 32.4 pence. Now, this has got a market capitalization of 400 million sterling. Now, you can see quite clearly here on this chart, this goes back several years, but the spike we see on the far right hand side there just prior to this particular trade for this year was back in April, where we saw it trade just shy, 67, 68 pence. We're considerably lower than that at the moment. Obviously, you're going to say there's an undervaluation in this, and of course the market generally has sunk. So small cap companies that don't produce do quite often get hit quite badly. What would you say to investors or prospective investors at 32 pence a share about the project, about what you're hoping is going to happen, and how you see the advantages in Atlantic Lithium develop?
So what I would hope, obviously, it has been a difficult year for the markets, and the excitement that was seen in lithium stock seems to have come off somewhat. If you look at the fundamentals, so let's talk about the sector as a whole. As I say, the lithium prices continue to climb. So it's actually, as I say, at an all-time high. I can think I'm fair to say that today at 7,500. As I say, when you're looking at operation costs for below $300, the payback on a project such as this, which is a very straightforward project with low capex, I mean, we're estimating the payback of the capex to be around 20 weeks. Now, I've worked in the mining industry for 25 years. We normally express payback in years. To be able to express the payback on your capital expenditure in a matter of weeks is a phenomenal thing. Now, why we say 20 weeks, we actually used relatively conservative modeling when we did that. So we were using modeling of around $1,360 against the current price of 7,500. So you can see that the opportunity here is enormous. So the background on the macro perspective is very good indeed in terms of what we're doing in terms of taking this project to production now. And the project itself is really as good as you could get for a hard rock lithium project. It is low OPEX, low CAPEX, straightforward mining conditions. It is situated, as we just said, in a location where you have excellent infrastructure, roads, port facility, power, none of those things that we have to provide for ourselves. And we have an excellent mining culture in country and people who are highly experienced in mining. So it's about as good as it gets. As I say, I've worked in the mining industry for 25 years, started with Antofagasta in Chile. And I've seen some really very good projects, but I've never seen a project that is as simple as this. And simplicity is a true bonus.
We've spoken exclusively about the Ghanaian project. What about the Ivory Coast or Côte d'Ivoire, I should call it really? But what about that part? Because that's also a lithium project, isn't it?
It is indeed. So in terms of the expansion potential for the company, obviously we have those license applications in Côte d'Ivoire. We think it's a good area to work, but to be entirely honest, when you have a good project as we have at Austria in Ghana, you really want to focus your effort on it. So not just in terms of taking it to mining, but we have a very large exploration area around the project with a number of target areas on it, which we get to explore properly. So the potential there for just increasing and continue to increase the project size at Austria is very good. And that is likely to add, how can I say, a lot more value than bringing any other project forward, just because the characteristics of Austria are very good indeed.
And just to quickly reference back to that share price, I won't show it again, but just to talk a little bit again about that in terms of what it represents. Is it just the Ghanaian project?
Arguably, it represents a fraction of the Ghanaian project in terms of value. If you look at the NPV on the project, it's we're into the billions. So we would hope to see that share price lift as people grow in confidence about able to take it to mining. And as you said, the price peaked in April. Since then, we've had nothing but good news on the project. The feasibility study, the pre-feasibility study that we put out, excellent numbers came through in that. We've continued to do drilling. The project continued to get bigger. The exploration areas continue to expand. We put in our mining license application, which now puts us on track to take the project to production in 2024. Everything is going very well indeed. So we do believe that in London, we're the premier lithium stock. In Australia, obviously, there's a lot more competition. There are a good 40 companies on the exchange, but also a lot more comparables that perhaps people can see and compare us to.
Yeah, look, Neil, we'll have to leave it there, but thanks indeed for joining us. It's an interesting story, Atlantic Lithium, and we'll watch how things develop as you head towards that anticipated production in Q3 2024. That's Neil Herbert. He's Executive Chairman of Atlantic Lithium. For more videos from us here at IGTV, join us on Twitter at IGCom, Instagram, and subscribe to our YouTube channel.